And for the month of October, I managed to bank 29.64%. For the month of November, I managed to bank 31.89%. And for the month of December, I managed to bank 46.66%. What I would be looking at from this scenario here is this. So this is the London high, and here is the, so that's the, this is the London high here. This is the Asian high here. Yeah, so it's more the area here that I'll be looking for. And then this is the December, this is the Asian low, and then this is the London low. Okay. So this is London low, and this is the Asian low. Okay. So one thing I will never do with gold is I'll never trade gold from the middle. Okay, ever. Never trading gold from the middle. I'm always looking to trade gold from the high and from the low. Now, this is the Asian high. And then this is the previous London low, correct? Okay, so I'll show you how I worked my trades this morning based on this this theory. All right, so the Asian low here, I didn't really incorporate this one for some reason. That's why you saw me just miss it now again, which I'll go back and study why I didn't get it. But the Asian low here is an area where the market has set a price. The Asian high here is when the market sets the price. Once the price is set between the Asian high and the low, then it's down to the London session to do one or two things: to create a new high and or a new low, or trade between these sessions. If the Asian high and Asian low is set and London chooses to respect these sessions, then what we do is we wait now for the New York session to either do one or two things. So either continue to respect the high and low of the day, or to make a new high and low of the day. Okay? If they don't make the new high and low of the day and maintain the high, then what they will do in the scenario is they will take out the high and then look to sell off the market, or they will look to take out the low and look to move the market back up. Why? Look at the volume at the low of the day. That's where buyers are sitting. Look at the volume on the London Open at the Asian high. That's where sellers are sitting. So if, let's say, the central banks, institutions, prop firms are trying to fill orders, they need to either break the high and the low as what we would call stop hunts to then see the market go up and do this, or they would genuinely have an area in the market where they would run the stops, and then now we will see the market pushing lower. Okay, this is not going to be something you'll be able to pick up immediately, but it's something that I'm identifying with gold. It happens a lot. So how did I trade it? Based on that information, this is the time that I'm coming to my charts, which is the new London low. I'm not trading that new London low because I don't know it's a London low until the price comes back to this level. Once the price comes back to this level, then this is an area where I'm looking to trade it. Now, what you usually would look for is the run of that low, which is what happened. You look for the run of that low, and then you look for your pin bars to then take this trade back higher, back to the Asian high in anticipation of a new high. All right. So what I did in this scenario is I jumped the gun a bit, and I took my first buy here. Now, the reason, well, I didn't jump it, but okay, no, look, I don't want to excuse any trade that is a good trade to then make it a bad trade, because this definitely was not a bad trade. What I saw was that the London low that was put in was taken out by this strong bearish candle to the downside immediately with a wick rejection and bullish close. I thought that was the run of the Asian low in anticipation of the new high. So I took the trade. Unfortunately, I was stopped out of this trade. Then what happened is the market came back down to make a new low. But at this point, it wasn't just any new low. The low that was made was a 15-minute candle breakout and a failure to close below that level here, right? A failure to close and then price pushing back in. So I'm now saying to myself, the new low that's been formed where we had volume in the market has now just been run. So buyers sitting in this area here for buyers back to the upside surely must have been stopped out of this trade. That's all I'm thinking. They must have surely been stopped out of this trade. If they have, then there's a high chance we'll continue higher. This is a certified trade in gold from a 15-minute perspective. It gets difficult when you scale down, but that's why I said master your higher time frames first, then come down. So anyway, once that happened, I waited for price to go lower. Now, I'm always looking to take gold on the furthest ends of the charts, never in the middle, so the highs and from the lows. Once price started to consolidate here on the 1 minute time frame and create this sort of support, I just knew in the back of my mind that there's a very high chance that we're going to continue to push higher on this market. So what I did, again, I'm willing to take the risk on this trade. I took the buy here like this. Now, I was super pissed. I'm not going to lie to you guys. I don't want to sound ungrateful here, but I was super, super pissed because this is where I wanted to buy the market. I always knew once I got run out of this trade, once it started to consolidate and there was bullish candles, this is where I would have bought. I got in here. The spreads were very high because it was pushing bullish, and it just is what it is. But I held the trade and I done pretty well on this trade. Now, what happens next is this. We anticipate the market after this run to continue back at least to the Asian's high. Remember what happens. Price will either respect this, break out of this to run stops again and continue bearish, or this time break to make a new high, and then New York will continue to push that higher. These are the three scenarios. That's all I'm thinking in the back of my mind. So I held my trade, and then I didn't want to share this on Instagram. I just like to share what I think is going to be good for educational purposes, and that's it. But I did take the sells from up here as well. Okay.
Hey, man,
so you took it as well, Sahil?
Yeah.
Right. So I don't want you to say, oh, in hindsight, this looks good. Oh, Ronch, you would say you sold that. I want you to see the picture that I've painted all the way from the 4H. This is the Asian high. It can either be broken and broken back in. It can be broken and maintain the high and continue higher, or it can be respected. Write that down. That's all you need to know. For any pair you're trading, go and write this down. This is all you need to know. So as gold comes up to this level now, I'm waiting for the market to show me a sign. More often than not, traders, I'm looking for double tops and double bottoms at these levels. Or I'm looking for a run of the low and then an area where it stops in anticipation of a continuation. So where did I sell this? Well, when the market came back to this high, I took the sell like this. Okay. Now, with this sell, I did suffer some drawdown. And unfortunately, I did get stopped out on spreads on this trade, on this one. What I then did do is I waited. So let me just illustrate that. So I got taken out on spreads. Sometimes spreads on gold can be absolutely beautiful, and sometimes they can be your worst nightmare, depending on however your broker's feeling that morning. I'll just be real. Sometimes they're just assholes, but I got stopped out on this one, which is fine. Anyway, I always knew that this was going to be a bigger stop loss. I was willing to take the risk, but I'm not entering every position with a full position because I want to stack into my position. So then I entered again here with a stop loss above. I don't view this as a stop hunt, by the way, traders. If price comes back and I get stopped out by spread, that's not a stop hunt to me. This is a run of your stops. This is just a smaller stop loss, and that is what it is. I'm still expecting price to respect the Asian high. So I entered again straight away. I'm very confident that the Asian high is going to be respected because we're not breaking it. Do you understand? During the high volume period, which is London Open, we're not breaking it. So I jump into a trade here. Then I jump into a trade here. And then I jump into another trade here. So now I'm in a full position, full position. And now I just hold the trades again. Where do I expect the market to go? I expect the market to go back down to the London low that was formed when it was wiped out. Why? Because this is where the buyers are sitting. Do I think it will break it? It could do. But am I interested in that? No. I'm just interested in knowing where price can react and or reverse. What happens? It comes back to this level. and then price comes back. Okay. So that is it. Now, what would I be looking for moving into the New York session? Well, this is my Asian high. This is my Asian low. These are intraday levels. So this is not important to me anymore. Okay. At this stage, could you buy off of this? You can. There is absolutely nothing wrong with that, because this is the level that's set during the London session. So we know there's buyers there because it's set. So we can buy off at this level. Would you buy again? Well, what you have to ask yourself is it sustainable? Has enough volume been entered into the market to push the market back to the highs to try to challenge the highs and take them out? No, it hasn't. For that reason, that means that there's probably a very high chance that the orders are depleting at this level. So where would I look for new orders? Well, I'd probably look for the Asian low, because we know that is where the market originally created the low, and that's what created the high. Again, once it comes back to the Asian low, what could happen? We could respect this and continue higher and trade between Asian high and Asian low for the rest of the day. We can break out and break back in, which will be a run of the stops, and then we continue higher, or we can eventually break and make the new low in anticipation of a continuation down. I don't know, but we'll just have to wait and see. Okay, so that would be the plan. The same here as well. Do I believe there's still enough sell orders up here? Well, absolutely, because every time the markets come back down, we've continued lower. All right. So I would potentially look for sells here again, but I'm also going to be very aware where we can have the run and a continuation. We can have price respect it and continue down, or we can have a new high and continue higher. Do I care where gold is going? I couldn't give two flying S's. Do you understand? I just know that the best place for me to trade gold is going to be on the edges, where the high and the low has been set of the day, and then trade it based on how price is reacting. It's that simple, guys. Can you do this on all other pairs? Yes, you can. And I'll just say, just keep practicing. I've been practicing this for, I'd say, the last 4 months. I don't know how long you guys have been with me, but I've said I've been working on something. I'm testing something. I did actually crunch my numbers, by the way, guys, whilst testing this. Okay, so there has been some ups and downs. I'm not going to lie to you, but overall it's been really, really good. I have tested 344 trades in total over the last 3 months, trading gold, and 108 longs and 235 shorts. Shorts have been the best. And for the month of October, I managed to bank 29.64%. For the month of November, I managed to bank 31.89%. And for the month of December, I managed to bank 46.66%. Okay. Now, what I want you to understand with this is that October, it was 29%. In November, it was 31%. But in December, it was 46%. Why? Because my confidence has grown over the last 2 months, because I've been executing so many trades without deviating from the plan. I've also got better at identifying where I should be taking trades versus where I shouldn't be taking trades. And that has allowed me in December then to come in and execute very, very confidently with this strategy and concept, allow me to stack positions and hold them for longer.